What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the futures, break down what the charts are telling us and what you should be watching for, and why on earth tomorrow is going to be a very critical day for the stock market and also for the overall market. Now, before I break anything down about that, before I talk about what's going on with the markets and why tomorrow is so important, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo and deposit $100 into the account, you're guaranteed 5 free stocks, plus you'll have free level 2 data with $0 in commissions for trading. It's a limited time offer. The offer ends in just 6 days. With that out of the way, let's get on with the video. So anyways, looking at SPY, I want to note that we're down about 1.09% for the day. But I also want to note that it's going to be very important that we get a bounce tomorrow. Why is that? That's because we're at a very critical level. Right here, we're actually at the bottom of the trend line right over here, which is where our channel is. If we break below this, it's going to be very bad. It's going to be horrible. And it's going to be the first time in the last couple of weeks we actually broke below the trend line. We've been in this channel for the last couple of weeks. All right, so we need to see a bounce tomorrow for there to be hope for the bulls. If we fail and this thing comes tumbling down and we see SPY break below 410, we could quite easily come down to 405 and then 400. All right, and we could see sentiment shift in the markets. All right, so that's why we need to see a bounce for the bulls tomorrow. It's going to be very critical. So I want to break down what's happening in the markets, what's happening with the earnings first before I break down any more details. To start off, we have Disney. They beat expectations. They actually saw less subscribers lost than they initially expected, or what Wall Street expected. And in my opinion, them doing good for earnings is very, very awesome. They beat on earnings per share and revenue. It's going to actually help the market for tomorrow to some degree, because sentiment is once again not shifting. The market is still on greedy mode. We're not at extreme greed as of right now. And we did reach extreme greed yesterday, and this could actually shift depending on what the market does. But we are at still very, very extreme levels. And I'm saying this because when the market's at these extreme levels, we tend to actually see tops or bottoms. For the greedy side, when we're at extreme greed, the market tends to form tops. Just like this, we had a top here, another one coming. So that's why it's very important. I also want to note that when it comes to data, we have PayPal's earnings coming out for tomorrow, and that's going to be very important after the market ends up closing. If PayPal ends up doing very well for earnings, this could actually help the market. If not, things can also change. We also have Hilton, Kellogg's, Toyota, and a bunch of other ones, so please be ready for earnings. Now, another thing that's very big is we have jobless claims coming out. The consensus is 190,000 jobs. I'm hoping we end up seeing something like that, or maybe something a little bit higher, because the market does want some more pain, because the Fed made it very clear that if the jobs market ends up coming out and it ends up being way weaker than what the Fed is basically anticipating, what could end up happening is, if there are less jobless claims and we end up seeing the entire jobs market just get stronger and stronger and stronger, the Fed could actually anticipate inflation to go up. If there's so many jobs coming and lower jobless claims, we could actually see inflation go up. And if that ends up being the case, the Fed is incentivized to be hawkish, and that's why the market did not like this. So jobless claims is coming out tomorrow at, I think it's going to be 8:30 a.m. Eastern time before the market ends up opening. That's going to be important. Earnings will be important too, and also the levels of the charts. So let's break down tomorrow from a technical standpoint. Right now, we have this nice uptrend on SPY. I do believe this is holding. We need to see the bounce tomorrow. We need to see a very, very nice bounce, or else things could get ugly pretty fast. I also want to note that it's very likely, in my opinion, we end up getting the bounce. I know I could be biased when I say this, but I'm going to guess, or at least predict, that we get the bounce. Now, just so you guys know, if we don't get the bounce, it's going to be bad. The market's not going to like it, but I think we most likely will get it, because we do have this gap at this 415 level, and the market does actually have some good things so far to rally off of. I know the Fed speakers coming out were not helpful, but we did get some good earnings, and I'm hoping that jobless claims end up being a little bit high, maybe meeting expectations. This could actually help the market pump as more buyers may step in, and we could get this gap fill. That's what I'm hoping for. If not, things could get ugly. Now on the triple Q, if we do end up seeing this thing down here, this thing might underperform a little bit and then get a bounce and try pushing up. We also have this gap up here. I don't think this was fully filled, but I do believe that there is still potential for the market to continue like this. I think on the 5-minute time frame, I think it's more clear that we did see this gap down right here. So what I'm essentially seeing is there are two gaps. We're basically in the middle of them. There's one right here around this 300 level, and then there's another one all the way up here around 309. Do I think that the triple Q is just going to collapse from here? I'm hoping that we get a small bounce, hoping that this thing does come right back up to fill this gap up here. That's what I'm hoping for. We also have the gap down here, so it's kind of in the middle. If it comes down a little, maybe we fill this gap first and come up, or we just, rally and fill the gap first. It could go either way. We'll just have to wait and see, but please be ready for that. It depends on the data and etc. And we are at this critical level. Now, I also want to note that for Tesla looks good. It looks strong. It looks bullish. This was actually my target from yesterday. I do believe that Tesla got the breakout, and we are going to likely see a bullish continuation as it's outperforming the markets. But in order for Tesla to be even stronger, if you want to see Tesla get to like 225, which is where the 200 moving averages on the daily, that's where 225 to 227 is. I do believe that could happen. That could end up happening. But in order for that to happen, we need to see the market get a nice bounce. I think that's going to play a big role in it. I still think Tesla could get above 210 or even higher, even if the market's just trading sideways. But if the market ends up collapsing and we start crashing from here, this could slow even Tesla down. Tesla could slow down a bit. It won't crash as hard as the market because it has relative strength. But I just want to note that Tesla's resistance is at 205, 209, and then 215, which is where the 200 EMA is on the daily. I think Tesla will most likely end up breaking those levels, but just in case you guys are prepared, you have to watch support at 198 to 200, then we have 195 and etc. But like I said, I think we're going to break up to the upside. I'm optimistic for a bounce. Please be ready. Now, the VIX got rejected off 20 multiple times, and you can see it was trying to break out, but it failed today. So here's our VIX. I would just want to close my EMAs real quick so it's a little easier to see. We didn't actually break above this. We broke above it temporarily, then came right back down. We did not break and hold above the resistance. So please be prepared, because if this thing does break out, it's going to be bearish for the markets, but I just don't think that's going to happen. My guess and prediction is this is going to come down a little bit and the market's going to get one last push up, and that's why it's very important. The dollar index, I do think this thing is it's going to cool off a little bit. I think that could likely help the market pump a bit. But once again, if it keeps going, that's going to be a very bearish sign. This technical setup, the breakout out of the falling wedge, is telling me two things. We're either going to continue pushing, which is going to be bearish for the markets, and the market crash starts, or it comes down one last time. Maybe it comes down approaching like CPI or something. The market holds up, the market pushes a little bit, and then we see this thing break out maybe after CPI or something, and then the market starts to cool off, right? Very, very possible stuff. Looking at Google, my target on Google was 100. I mentioned to you guys I expected to fill this gap and maybe get close to 100, and then we could get a bounce after that. I still believe that's very possible. If we do bounce, I'm going to be watching this 103 level, and then up next comes 105 right over there. As far as Amazon goes, it did something very similar to what I predicted. I thought we'd come down right to about 98 and kind of hold very close around there. We did close above 100, which is a good sign. We might try to get a bounce and come back to this 104.8 level. On Aapl, I'm actually seeing this thing just chopping back and forth. We do have this gap down here. I don't think we're going to fill it just yet. Hoping for Aapl to get a rebound and try to get back to that 154. Finally, Microsoft. On Microsoft, the overall setup it did end up coming down a little bit, but the trend is still looking a little bit more bullish than bearish, especially when I bring up the MACD. I do believe this thing is going to continue to actually pump to the upside. We have a very nice looking setup. But first, we have to see how the overall market performs. Finally, the 10-year Treasury yield, it is starting to actually form. This looks like a doji. So this is telling me that yes, even though this thing got the breakout, there is a chance it's going to come down a bit, which could be bullish for the stock market. If this comes down, maybe it comes down to fill this gap right here first, and then it continues to push up. That could happen. It's just a small drop, only to 35 if it fills the gap down here. If it comes down to fill this gap, that could be a bullish move for the stock market. Maybe SPY fills the gap at 415. Then we get a big bounce on the 10-year Treasury yield. The yields start popping up, and then the stock market starts coming down, maybe going into like CPI or something. But that's what I'm essentially eyeing. Now, that's basically what I have for this video. Finally, for the IWM, I'm actually seeing a very similar trend as SPY. This is actually slowing down on the daily. It's actually slowing down worse than that of SPY on the daily MACD. So I'm going to be watching for a potential bounce around here. When it comes to levels, I'm going to use the Fibonacci retracement for this. I think that's what I was supposed to do. As far as fib levels go, there is going to be a very important retracement mark to look for, and that's going to be based off the fact that this thing has been pumping quite a bit. We are starting to see some potential exhaustion for many of the buyers. This thing is trying to hold the 0.236 retracement. That's where we're trying to hold. If it breaks below that, I'm going to be watching that 188 level, which is the 0.382. If not, if we do get the bounce, it might just fluctuate a little bit, come back to this 195.4, 195.7 level. I'm actually watching this very carefully. If we do end up seeing that, if it breaks above that, we still have the top just close by. So there's no confirmation that we are crashing as of right now. We need to see a bounce tomorrow, so I want to see this thing reclaim 195. Anyways, that's what I have for this video. I went over Aapl and Tsla and SPY and QQQ. Be ready, be prepared for the big days, and just know it's tomorrow we need to see a very important bounce. Super important the market does that. Anyways, thank you all so much for listening. Have a great rest of the day. Remain calm, cool, and collected. And I'll most definitely see you guys in the next video. The market's to the moon because the long-term future is still incredibly bright, despite the fact that there has been lots of chop in the markets. So please be ready, guys. Thank you. I appreciate all of you. And peace out.